Hey, how's it going everybody? My name is Tucker Kraus, the Teen Investor, and welcome back to another video. Hopefully the green screen is behind me working and doesn't look too god-awful, or maybe there's just going to be a big green screen behind me. I guess I'll find out when I edit this. But I finally got it set up, and hopefully the camera angle's, slightly less creepy now, though I'm staring into your soul right now, so that probably doesn't help. Either way, today we're going to be going through some more of you guys' requested companies. Today we'll be looking at Avino Silver Gold, which is definitely very interesting because we are just seeing precious metals finally starting to pick up again, especially after today's strong CPI report. Well, I guess strong isn't the right word. I should say much higher than expected CPI report definitely seemed to boost them today, along with the fact they were just starting to break out of lows in the last couple days and all that kind of stuff. So again, it'll be interesting to look at some more precious metals companies. Good to take a break from uranium every once in a while. So Avino Silver Gold trades with the ticker ASM on both the Toronto and New York stock exchanges at $1.20 Canadian or 94 cents USD. And they also have a market cap of $98 million US or $121 million Canadian. And so they are currently going to be paying $1.71 per pound in US dollars or $2.11 per pound in Canadian dollars. Now, again, I haven't looked at a whole ton of precious metals companies, so I'm not sure how amazing that is, if that's good or bad. But it's just something I'd like to know. As we look at more precious metals companies, I'll have a more firm comparison. So we'll be able to see in future what kind of seems like a good dollar per ounce cost. Though at least compared to $1 per pound like we look at for uranium, this would be, if this was pounds of uranium, very good at least, right? Now, once again, very few of you guys out there watching are actually subscribed. So please, if you're not currently subscribed, go hit that subscribe button. We did recently blow past 400 subscribers, so thank you guys a whole lot for that. That's insane. As long as we can keep up this momentum, that would be amazing. If you're not watching right now, it's free. It takes 1 second out of your day to go do that. So if you're not subscribed, please subscribe. Helps out the channel a lot. So just looking at some of the stock charts here, I have the move since I decided to size up my little character on the corner here. I'm not sure if this, can you see this hand when I did that over there? Maybe it did, maybe I just repeated it idiotically, who knows. But we can see here on their charts in the 6th month, yeah, like a lot of these precious metals miners, a lot of decline. And just in the past couple weeks, it started to come back up and get some movement. Though, the stock price did crash 7% today after their Q3 earnings report because they missed massively. Now, that's not to trash the company. It's because they restarted their operations during the quarter, and so they weren't able to fully lift off. At least that's my understanding from it, since I began my research before the Q3 report and it came out today, which is the day I'm fully making the video, which is November 10th. So I won't be covering it super in depth, but that's what I got out of it, at least, is that it was because of that earnings miss. On the max chart here, we can see that it's definitely pulled back off some more recent highs here, as we can see here, of course, and even just in the short term over here, and then it's still, of course, well off any of its older highs. So looking at some slides I pulled out of their presentation, the first one here is their just mine location. I just want to note this because it says they're only an hour drive on paved road from a major urban population center, which is good to see. And so, because they'll have those large local communities, they'll be able to get a labor force much easier. Now, this is just going some key highlights from their presentation. They've reduced their debt since the beginning of 2020, and so they are almost pretty much debt-free, and so they have a whole bunch of liquidity, and they've got their exploration programs fully funded, and they can call themselves well-positioned for the future. So this is just some of their historic production. We can see in 2018 and 2019, they were getting in the range of about 2.5 million ounces. In 2020, with strikes and COVID lockdowns, it did collapse significantly, and they expect to only about match that this year, though they expect to go back to what they were producing before in 2022. To touch on share structure very quickly, once again, they've got a market cap about that $100 million range, but this is what I like to see. Look at that share dilution. Only 108.5 million shares outstanding. That's very well done. It's, it's not 500 million like lots of companies, or a billion, which I really don't like, at least when we're talking these smaller junior companies. But when we also look at their share breakdown, we can see I really like this. 5% insider share ownership. That's really good. That's kind of like my, 5 to 10%. I really like to see that in a company. It shows the management's confident, and it makes me confident that, the management cares about this company. If a management doesn't hold the stock, why are they going to care if the stock goes up or down? If they do, they obviously want the stock go up. So that's why I like when there's high insider ownership like this. Not to mention, it's pretty interesting that is 90% retail owned as well. Often a lot of these companies will have a larger institutional backing. So there, of course, they're Avino Silver Gold, so they have the Avino Mine. And so it was temporarily closed, but it reopened August 3rd of 2021 and expects to reach full production in Q4 of 2021 or Q1 of 2022. So here we can see that they have 97.7 million ounces of silver equivalent ounces in the ground. Okay, the next sheet I'll break it down into silver, gold, and copper separately, but here I've got the silver equivalent listings, and there's a 1% royalty, at least from what I was able to make out of it, and there is a 110 grams per ton grade, again in silver equivalent ounces. That is not the silver grade, that is not the gold grade, that is silver equivalent ounces. And so then going on to their total capex, a lot of this was weird here since they didn't have it fully listed in their tech report. It was because capex and opex for Avino I just took based upon past results at Avino and averaged it a lot for the opex, I should say, alongside their oxide tailings PEA. Oxide tailings is an expansion onto the Avino mine that they're doing. So it's a little bit confusing. I thought it was simpler to push it all into one. And so when we look through it, we can then see that with that, I'm going to be factoring in that additional capex on and taking those averages from the past, 1.2 million years, or $1.2 million per year for the rest of Avino's mine life, combined with the $28 million they expect to spend in capex on oxide tailings. And so for the life of mine, I just took their deposit size and divided it by the amount of silver equivalent ounces they're mining per year, and we get 33 years, though chances are they won't actually be mining for that long. Most companies don't mine their entire mineral resource because chances are this entire mineral resource doesn't actually exist. There's a reason they're called inferred mineral resources, or indicated, not confirmed. But as we keep going, that's also $6.37 for silver equivalent ounce to get it out of the ground, with, again, a $68 million capex, if I didn't already say that. I hope I did, and hopefully or maybe I'm repeating myself. I'm not sure. So this here, just so we can break it down all nicely, they have 57.4 million ounces of silver in the ground with a low grade, or well, at least compared to the other companies looked at, of 64 grams per ton. And then we go over to the gold, once again, low grade. They have about 500,000 ounces of gold in the ground at a low grade of 0.64 grams per ton. About 8 grams per ton is high grade for gold, and for silver, it seems to be about the 100 grams per ton range to be high grade. Now, for copper, they have 222 million pounds in the ground at a grade of 0.34% parts per hundred. And so, again, I'm not a copper expert. I'm not sure if that's good or bad. Also, Avino has several exploration projects beyond just the Avino mine. And Avino did complete production at a mine just northeast of Avino, or it's like kind of was a part of Avino mine. It was another vein they mined out, something like that, but it's currently being explored further. But their production overall has been reduced, though we still see that they expect to get back to normal with oxide tailings and whatnot. So here's my DCF valuations for each of them. At current silver pricing, flat out unprofitable, which does line up with their Q3 report because they had a net loss there. Same thing, even at $30 silver, massive overvaluation. But we can see just at $44 silver, they become fair value, and at $50 silver, they're over a double. And just going up another $5 from there, it's 238% upside. So these guys are crazy leveraged. So if we see $50, $60 silver, these guys could go crazy. But if we only get up to, say, $40 silver, that's not looking good for them. But there could also be errors here since I tend not to use the equivalent ounce production, which I'm using here, compared to breaking it all down into the individual commodities production and that kind of thing. So again, this could be a little incorrect here. And of course, like always, 50% capex and opex inflation combined with a 10% discount rate makes these more conservative numbers naturally. But all in all, these guys do look pretty decent. They've got a good shareholder structure, good management, it seems like, because that was kind of the issue I ran into with Arcana. Very, very good financials. Share structure was, to put it anyway, just, well, I guess I shouldn't say that, but effing terrible. I'll put it that way for you guys, right? Just simply not very good. These guys, they look like they could be crazy leverage to the silver spot price. But again, this is not financial advice. I, of course, recommend you always do your own research. I hope you enjoyed this video. Thanks for watching, and I will see you next time.